The RSI divergence is literally like the keystone of all trading strategies. It should be in your tool belt, and I use it like literally all the time. So in this video, we're gonna discuss an RSI divergence. Welcome back to the channel, everybody. My name is Artie, and this is The Moving Average, a show where we discuss everything day trading to keep you profitable on a consistent basis. First off, let me say my vacation was awesome. My tan feels great on my skin, but I am glad to be back here making videos for you guys. I seriously needed a break. Like, being on the beach all day was, Okay, so let's just get into the charts because there's a lot with the RSI divergence that you guys need to know so that you don't get stopped out, so that you don't get in too early. Like, it's kind of a very delicate thing, but to be able to spot it correctly and use it, oh man, it's so clutch. Okay, so first I'm gonna help you guys set up your screen to look like mine. What you're gonna wanna do is first put up 3 moving averages. I like smoothed moving averages. Those are different than simple or exponential. Smoothed, ready? You go to the indicator tab up at the top here and you type in smoothed. It's in the built-ins, click that 3 times and it'll give you 3 smoothed moving averages. Then just adjust the settings by changing the inputs to the first one 21, the next one 50, the next one 200. That's gonna give you these 3 lines here. You can make them whatever color you want. The next thing you're gonna wanna do is add an RSI. So just type in RSI and it's again a built-in relative strength index. Add that onto your chart. Keep the input as 14, source close, and style. I like to do this one thing which is gonna help you use the RSI properly instead of overbought and oversold, which is the wrong way to look at it. You need to change the upper band and the lower band to 50. And if you want to keep up with the color scheme of the channel, change the RSI line to yellow. That way your RSI is going to look like this. Usually there's a line here at the 70 level and a line here at the 30 level, signifying overbought and oversold markets, but it's the wrong way to trade the RSI because usually when it's overbought, it'll continue down because there's momentum in that direction. So we're using the RSI properly as a momentum indicator, showing us levels below the 50 as down and levels above the 50 as up. So buying and selling. Okay, so once you have this up, let's get you onto a 15-minute chart. That is a nice middle of the range time frame to look at. 1 minute is too noisy and 4 hour is just like you're waiting days for a trade to go through. Okay, so basically we're looking at the top of the markets right here, the tops and the bottoms of the markets. Usually when these things happen, there is an RSI divergence associated with this. So let's just start from right now and work our way back to a few examples. So what we're looking at the top of the range of the price is higher highs being formed, while on the RSI, lower lows are being formed, thus creating the divergence, showing that the price might go in the opposite direction. You can see that clearly here. We had a high and a lower high, whereas here we had a high and a higher high. The issue is that most people get into a RSI divergence far too early. They're not waiting for the momentum to change hands. For example, right here, we had a high and a lower high. And that happened right here, and yet the price continued up. Stick with me for a little bit. I'm gonna explain why this is and how to avoid this in just a few minutes. But I wanna get to a few more examples. Even on the downside, we had our low and our lower low, when on the RSI, we had a low and a higher low. This literally happens almost every single time that the price reverses. And again, right here, like it's consistent, higher highs, right? And then right here, we're having lower highs. So how do you avoid getting in right here and then getting stopped out right here? It's a 1-word answer: wait. I'm kidding, but patience is very important when waiting for an RSI divergence. Basically, what you're doing is if you get in too early, you are fighting the momentum. You're like trying to hold back a river with your bare hands. It's not gonna happen, and it's gonna burn you 9 times out of 10. This is probably our best example so that I can show you. we had this massive bullish momentum, correct? Like the RSI went from an 18 up to an 89 in one big swoop. That's momentum. When price action is going that hard in a direction, for you to try to catch the reverse is completely stupid. At this point, your best bet is going long with it because it's so strong in that direction. So basically, you're just gonna see this, you're gonna see it reject and then continue up, and you're just gonna wait. Wait for a higher high to be formed and a lower high to be formed on the RSI. But remember that that momentum is very, very strong, so you have to wait even longer just to avoid the trap that is probably being laid for 90% of traders. Now, most people like to think that once the price action breaks through a moving average, then it's for sure gonna go down and continue down and they're safe, which is incorrect because as you can see right here, if I zoom this in, the price broke through the moving average. So this entire candle was red at one point, and then this one started forming and it was completely red right here below this moving average. And everyone's like, cool, it's now rejecting because we have an RSI divergence. And then what happened? It completely shot up and hit everybody's stop loss above this high, making a higher high. And then once it had all of its liquidity and was happy with what it could do, the price tanked after that. This thing is gonna help you out so much because what I want you to do is wait. Wait patiently because what you're doing is you're seeing a break of market structure without even knowing it. I'm gonna draw so many squiggly lines on here right now, it's ridiculous. So we've had a higher high, right? Another higher high and a higher low and another higher high, all of which have an RSI divergence attached with them. So you see this, it's higher highs and higher lows all the way up. Then the price starts cascading down, breaking through the 21 period moving average and retesting it and then cascading down even more below the 50 moving average. At this point right here, this is extremely important. Remember what I said about the RSI 50 level? If it's above, that means it's bullish, and if it's below, that means it's bearish. So the RSI level finally got below the 50 level, showing a downtrend. So we have these lower highs on the RSI, higher highs on the actual price action, break below the moving averages with a retest and trading below the 50 level on the RSI. Now this is your opportunity to get in. People are getting in way too early on an RSI divergence and they see one lower high and they immediately buy without waiting for the other confluences. So the confluences that you're looking for is higher highs on the price action, lower highs on the RSI with a break below the 50 level to show that the trend is actually reversing. And if you can get a retest on a moving average with that downtrend, I mean, you are a safe bet for this trade. Like, it's just going to go in that direction. So you need to wait. You need to see the structure being broken. What do I mean by that? If you don't know about market structure, please watch this video. But essentially, higher highs and lower highs create a staircase pattern up. And then once it breaks down and we create a lower high, meaning that we fell below this one right here, that's a break in market structure. Dude, this trade has so many confluences, it's ridiculous. So, confluence number one, right? Creating higher highs on the price action, creating lower highs on the RSI. That's your divergence. A break in market structure, a retest on a moving average, trading below the 50 level on the RSI, and last but not least, my absolute favorite trading strategy to do, a 3-line strike. Did you miss it? I'm gonna show you right here. Let me get rid of all of these drawings because it's looking super messy right now. But essentially a 3-line strike is 3 subsequent candles in one direction and then an engulfing candle in the opposite direction. And we got that right here. 1, 2, 3 bullish candles and then a bearish engulfing right there. All of those confluences together, once this candle closes, you get in right here and you ride this sucker down until you're satisfied with your profits. So in this one trade, if you're looking at RSI divergence, you got stopped out 3 times because it kept making higher highs. But if you were patient and you waited for your confluences, you had 1, 2, 3, 4, 5, 6 confluences on this trade on a 15-minute chart. And if you guys remember my videos on trading off of the moving averages, you could have actually targeted the 200 moving average on this trade, knowing that the price was either going to go down to it and reject up, continuing that uptrend, or actually reversing off of it and continuing down past the 200. So taking this trade off of the close of this 3-line strike, let's see how many pips we would have gotten on Euro USD. Right there, 45 pips off of a 6 confluence trade. Like, that's money in the bank, especially if your lot sizes are huge. You could have made thousands upon thousands of dollars off of this one trade. Now, your question probably is, can I use this on the 1-minute time frame? Because all of my videos about anything 1 minute are just blowing up right now, which is why we've gone from 200 to 700 subscribers while I was on vacation. Yes, this does work on a 1 minute, but there is more noise and more chance for you to get screwed because you're not looking at where the price is going on a higher time frame. So if you want to do this on a 1 minute, you can use the exact same strategy, everything exactly the same, just change the chart to a 1 minute, but be more mindful and start your analysis on a higher time frame, like a 30-minute, 1 hour, 15-minute, then work your way down to make sure you're not going against this huge uptrend or huge downtrend. The number one thing that I can tell you right now is stop doing what you're doing. If you're getting stopped out on an RSI divergence, it's because you are trying to get in at the top or peak or whatever. So just stop and wait and be patient and like watch the charts. It's not like you're doing anything else. Just watch the charts, wait for all the confluences to line up, then make one fantastic trade at a higher lot size and you're done. Like, you've made a ton of money that day instead of trying to get $5 here and $6 there and $18 here. You know, you could have gotten $800 off of this one trade if instead of doing 10 small trades, you just did one nice, decent sized trade. So if you guys want help with this and you're seeing these happen on the charts, but you don't know if that's a good entry or not, join our Discord group. We got a nice fat community growing over there. We all post trade ideas. We all discuss with each other, and it's just like an open place to discuss things. If 6 confluences isn't enough for you and you want somebody else's opinion on it, take a screenshot and put it on the Discord group. I'm on there all the time. I'm happy to answer questions. There are other great traders on there that are also willing to help out. So if you guys are still watching this video, guess what? That means that you actually like the video. So if you wouldn't mind just hitting that big thumbs up button right there, letting me know that you actually like it. And if you guys want a scalping video that is just phenomenal and has been blowing up like crazy, watch this video right here. And again, if you guys are enjoying this content, please subscribe to the channel, help the community grow. You can subscribe by clicking this TMA black button right here. Thanks so much for watching, and we will see you in the next video.